Welcome to Week 7, Risk and Psychology. This is where trading becomes real, as we move beyond just analyzing the market. Up until now, everything you've learned has been about understanding the market, but this week is about understanding yourself. No matter how strong your analysis is, your results are defined by how you execute, and execution is not just technical, it's psychological. Let's start with something simple. Every trade you take carries risk. Not possibility, not uncertainty, but guaranteed risk. The key difference between traders who succeed and those who don't is not who avoids risk, but who manages it effectively. Every single trade carries inherent risk. You must acknowledge this reality before entering the market. Most beginners focus on profits, asking, how much can I make? But professionals ask a different question first. How much can I lose? Protecting your capital is the priority, because staying in the game long-term is what leads to ultimate success. Here's the challenge. Even when you know these principles logically, it's hard to apply them emotionally. The moment you enter a trade, fear appears, bringing questions like, what if I lose? Or what if I exit too early? And when the trade moves in your favor, greed takes over, pushing you to ask, maybe it will go higher or just a little more. This is where discipline breaks. Not because you don't know what to do, but because emotions override structure and logical planning. To combat this, we use specific tools. This is why position sizing matters greatly. The size of your trade directly affects your emotional response. Keep it balanced. Too large, and every movement is stressful. Too small, and you stay objective. Many traders see stop loss as failure, but in reality, it's protection. It defines your maximum risk before the trade even begins, removing uncertainty and allowing clarity. But here's where most traders struggle. They move their stop loss, they ignore it, or they simply hope the trade turns around. Remember, hope is not a strategy. This is where structure becomes critical, because when your decisions are predefined, emotions have less room to interfere with your trading plan. Predefined decisions ensure that your emotional state does not dictate your entry or exit points, leading to far more consistent results. This is where resources like tradegpt.guru help by giving you structured plans, entry, stop loss, and targets, reducing the number of decisions you need to make in the moment. As you go through this week, pay attention to your behavior, not just your trades. Notice when you feel fear, greed, or when you break your own rules. Awareness is the first step to discipline. And discipline is what creates consistency. Not perfect trades or perfect timing, but consistent execution. In the long run, it's not the best traders who win. It's the most disciplined ones. This course is sponsored by tradegpt.guru.